We do believe we're in a bull market that is broadening out, a very healthy bull market, climbing a wall of worry. There is a lot to worry about. Wars and even turmoil in the U.S. Along political lines recently. And yet we have this wall of worry, the market climbing this wall of worry and broadening out, we think, which is very much important in terms of the market sustaining this bull momentum. And we do think that there's going to be a breakaway for innovation stocks, truly technologically enabled disruptive innovation, we think is going to start outperforming these indices. One, we think that the Ethereum protocol is where most of the DeFi or decentralized financial revolution is taking place.
Cathie Wood kicks things off by zeroing in on two of the biggest drivers of markets, inflation and interest rates. She points out both are moving lower, just as ARK Invest anticipated. And while tariffs have added pressure, it's businesses, not consumers, shouldering most of the costs, with companies absorbing more than half of the impact. If you're getting value from this breakdown, make sure to hit that like button, subscribe, and drop your thoughts in the comments. And don't forget I share exclusive insights and daily updates in our Telegram group, links in the description.
We do believe we're in a bull market that is broadening out, a very healthy bull market, climbing a wall of worry. There is a lot to worry about. Wars and even turmoil in the U.S. Along political lines recently. And yet we have this wall of worry, the market climbing this wall of worry and broadening out, we think, which is very much important in terms of the market sustaining this bullish momentum. So with that, back to you, Dan.
First one's coming back to you, kind of a high level question here. It seems like passive index tracking investing only further inflates valuations of the largest companies. What is ARK's view on this phenomenon?
Well, we have been talking about this phenomenon, particularly in 23 and 24, as the market was hitting all-time highs, and it was powered by the largest stocks in a very concentrated indices by historical standards. So yes, self-fulfilling prophecy. And this is the battle we've been fighting from an active management point of view for, I'm going to say, 20 years. Really, this started after the tech and telecom bust, and even more so, it accelerated and gained momentum, this move towards benchmark sensitivity or passive after 08 and 09. And so we think the pendulum has swung far enough, but we thought that a few years ago as well. As I mentioned in my introduction, the market broadening out here is really important. And we do think that there's going to be a breakaway for innovation stocks, truly technologically enabled disruptive innovation, we think is going to start outperforming these indices. Why? It is because some of the largest holdings in the broad-based benchmarks are going to be disrupted themselves. Many people have been talking about Apple and its inability to get its footing in the AI space or in the autonomous mobility space. What is the ultimate mobile device? It's an autonomous vehicle. And Apple had been trying to break into that world, and I think for the last 6-7 years. And we've seen one turnover after another in terms of strategy and management teams. So that's a candidate and is a very large part of the index. Google, we think, is one of the best AI companies in the world. It has some of the best talent in the world, from DeepMind, an acquisition from the UK. And yet it is in harm's way from this point of view. It has had a lock on the search market. And now there are many more players. Perplexity, of course, is one. Even Bing, with OpenAI and Microsoft, is gaining share. Now, Google is also combating that, but the fact remains, it had roughly 95% plus of the search market, and that is changing. And even Amazon, again, we love Amazon's positioning in the cloud. We think the cloud is extremely important here. Oracle's report put an exclamation point on that. And yet Oracle could it be a spoiler in this market? We noticed that Amazon's cloud margins went down while its revenue growth did accelerate. That's an open question. And of course, agentic AI calls into question whether or not we're going to, as we are on shopping expeditions, whether we're going to let our personal assistant do the shopping for us, or go back to our old habits and start with Amazon, which historically has been the first place many people did start their shopping expeditions. We don't know. And so the very comfortable world that those companies dominated is changing. And we think that there are many other companies that are much quicker, more agile. But as Nick Gruss, our Director of Research for Consumer Internet and FinTech, would say, distribution. So we have a live debate here at ARK. Our Brett Winton, our chief futurist, is somewhat skeptical and thinks that there will be more disintermediation than many analysts out there expect. So bottom line, we do think the market's going to broaden out here as some of the most important and biggest positions in these benchmarks start to disappoint, maybe not in a huge way, but at the margin. So with that, back to you, Dan.
Yeah, thank you, Cathie. And just the sheer size of that passive universe, everyone thinks the broad benchmarks in general. There are a lot of funds out there that are quasi benchmarker or benchmark hugging that really, it doesn't come up in that first initial look. So, that pendulum has swung quite far. The next question, turning to the crypto side here with Lorenzo, a lot of talk about digital asset treasury companies or dapps. Can you please explain ARK's just general thesis here?
Yeah, of course. So maybe I'll give a brief overview. DATs are companies that trade publicly that are accumulating as much Ethereum, Solana, or Bitcoin as possible, and so it really depends on the mandate that they have. We've invested in Bitmine, and so as an update on Bitmine, they now hold more than 2 million ETH on their balance sheet. And I think now they have more Ethereum than the rest of the top 10 Ethereum DATs. So they've really pulled away and hit escape velocity. They've been able to increase, to continue to increase the ETH per share. And so I think in terms of the thesis down, we think DATs are interesting wrappers. They are, for certain assets and specifically smart contract layer ones and even some of the other altcoins are a more efficient exposure given the yield bearing nature of these assets and the the flexibility that you have with these assets to use them on chain to generate potentially more revenue. So that is the general thesis. If we compare them to ETF, and we've talked about this, for now, staking is not allowed, and even if it were, we believe they're going to be able to stake a portion of the AUM, and so it will be from a revenue perspective and yield an inferior product. So that really is the thesis. I think overall, what we've seen, in the first 2 months, MNAVs have really compressed, right? Like in the past weeks, a lot of these DATs are trading now between 1x MNAV and 1.1, 1.2. And so I think the first phase was really to leverage the ATMs and be able to increase the ETH or Solana or Bitcoin per share. I think perhaps now we're really looking at the market with some compression on the MNAV, and so perhaps we're hitting a second phase where they'll need perhaps to repurchase the shares, which we've seen with SBED and a couple of other DATs, or perhaps tap into the debt market or convertible. And so we're actively monitoring the situation and the space. I think one interesting point also for BitMine, they've just invested $20 million into 8Co, which is the digital asset treasury that is accumulating WorldCoin tokens. And so they own about 13.7 million shares of the DAT. And I think Tom has said that they want to allocate about 1% of their balance sheet to Ethereum ecosystem opportunities. So that would be either DATs or perhaps underlying tokens. And so that really has been the first investment from BitMine. And so I think we're very much entering into a more mature phase, and we'll see how these companies evolved and how they're able to leverage capital markets in different ways.
Yes, and Lorenzo, just in terms of why we bought BitMine Immersion in the first place, it was very difficult to gain a toehold in Ether through staked ETFs. We had to resort to the Canadian ETFs because the US, at least so far, does not allow staking in ETFs. And so this was a solution, this DAT, BitMine Immersion, for Ether was a solution to that problem.
That wraps up Cathie Wood's latest outlook, from falling inflation and interest rates to how businesses, not consumers, are carrying the brunt of tariffs. If you found this video helpful, don't forget to like, subscribe, and share your thoughts in the comments below. Do you think the market is already pricing in this shift? Or is Wall Street still behind the curve? If you're getting value from this breakdown, make sure to hit that like button, subscribe, and drop your thoughts in the comments. And don't forget, I share exclusive insights and daily updates in our Telegram group, links in the description.